Let's get into MSTR then. It was a powerhouse 2 hours on the earnings call, investor call yesterday. It was like a 100-slide deck that Saylor went through, which was about an hour and a half of the presentation. And they just keep getting more and more like fully formed in this vision that they have for these financial products on top of Bitcoin that they can provide to the world. And it feels like, to me, in this call, it really has crystallized into this a new financial system of products on top of Bitcoin. And the vision is pretty compelling. So Ben is one of the internet's foremost experts on MicroStrategy and leveraged Bitcoin equities, or LBEs. So I'll hand it over to you, Ben, when you're ready.
I think first we just have to acknowledge what a big deal yesterday's earnings was. When you think about earnings releases from corporations, they're lucky to get 1,000 people to watch those. And you're seeing the impact of what happens when you spend the time to truly engage with the communities that are building behind you. 150,000 people watching an earnings report. And then when you take that a step further and you go, that earnings call was scheduled for 1 hour, and they threw that out the window, and you've got more than 100,000 people sitting there watching, digesting everything that he's saying. It just shows you the power of engagement, because it matters, right? It shows that you have excitement around your business and it's something you truly believe in. And that's unique. We don't get a lot of that. Tesla got a lot of that from Elon because he was constantly innovating, pushing the envelope. He was keeping his investors engaged. But outside of that, it's very hard to find companies that seem to have a true core belief in what they're doing, where they want to be out there engaging and educating and teaching the world what they're doing in a very transparent way, and then pushing for what needs to come next. And I think he did a masterful job in that, because the internet comes alive every time you hear ATM. Right? If that acronym comes out, the internet lights up. And he's done such a good service to the market to show why Bitcoin treasury companies are very different than all of these other capital burning entities that are out there. Most companies, if you see an ATM come out, you should be a little scared, because usually it means they're plugging a hole in their operations somewhere. And that's not capital that's retained that can provide you future value. That's capital that's going to go into funding gaps in operations. Maybe it's plugging a hole in a merger that hasn't come together really well. They're going to go acquire buildings that are going to add costs into whatever it is, right? They're using it to operate the business. These Bitcoin treasury companies, that's not what they're doing. They're capturing an asset dollar for dollar that lives on your balance sheet. And that's huge, because that continues to perform well into the future, right? It's not a one-time event. And he was making that point throughout the entire discussion, where he was saying, we don't think in terms of quarters here. We're not the company for you if you want us to go try to tweak and eke out 3% better earnings this month. That's not what we're about. We are about decades-long value creation. And we're going to be very strategic and very methodical about how we do this. And not only that, we're going to be a part of transforming the industry around it. So his push for the transparency and the credit was just masterful, because that is the next evolution. It took him a really long time to get everybody comfortable with what it meant to capitalize a company around Bitcoin. And then when they opened up all of these other products, right, all these fixed income products, the convertible bonds, the preferred offerings, when he opened those up, that comes with an entire new learning curve. And the next evolution of that, beyond just how accretive those are to building that intrinsic value under your shares by increasing the Bitcoin per share for all your common stockholders, is showing that these are being issued by truly creditworthy organizations. They're massively over collateralized. And the risk premium that the market is putting on these is quite frankly absurd, because when you're going out and you're borrowing money you already have, and you have no plans of getting rid of it, and you're over collateralized 5, 6, 7, 8 times, that is a highly creditworthy organization that is truly institutional grade, and that should bring those spreads down. So I thought it was an absolutely masterful use of time and social capital by MicroStrategy, right? They take the time to put together a 100-page deck or whatever it is to allow the retail investors to digest this strategy and what the next evolution comes like that unlocks a $300 trillion market. And then they give you everything you need for that retail community to become become the megaphone for their corporate strategy and for their corporation. You're building an army of marketing.
Yeah.
It's amazing what they're doing.
Ben, I want to drill down on something here for the listeners that I know you're aware of, but I think there's been controversy on the ATM, right? This has been like a hot button issue. It's all over Twitter. And I think I know where you stand, but I really want to drill down on this. Something I was tweeting about yesterday and today, there's a lot of shareholders out there that think Saylor is responsible for the drop in the common stock share price over this last period because he just kept selling shares into it. Now, it's basically impossible to figure out exactly how much impact the ATM had, but my priors and my base case is that this really was a minority factor. I think the whole market pulled back. I think it had a parabolic run up. And I think his ATM sales were a tiny percentage of daily volume. Sure, if he hadn't sold it, maybe the share price would be a little bit higher. Also, maybe not because they'd own less Bitcoin. But could you answer that question specifically? What is your view on the ATM? As a shareholder, are you happy that he's going to keep tapping this ATM? I think I am, but I'd love to hear your answer.
Yeah, the ATM really doesn't bother me. We can acknowledge that ATMs are inorganic selling pressure in the market, right? There's no way around that. If you look at the way companies operate and the trading that happens in the market, really, if the company is the one selling, that's a true source of inorganic trading. But the problem is when people look at these peaks, and particularly the blow-off peaks, and we had one of those back in November, right? Stocks don't go vertical like that forever. That's just not real. So of course, he took the chance to arb that opportunity. Of course he did. Because he has a decade-long outlook and not a two-day trading outlook that's going to cater to derivatives traders. And that's where I think you get a lot of the noise, is when you have an equity like this that has this really high volatility and it makes these explosive moves, you get people that take short-term bets on that. And Saylor's been pretty clear that their operations are not meant to maximize the derivatives trading when you're putting time on your trades. They're maximizing long-term shareholder value here. And if you zoom out on the MicroStrategy chart, you can't argue with the success of that outcome because that trend line is going up and to the right, and they are continuously building value underneath each of your shares. And the ATM is just one of those tools. And it's a tool that they can use quickly, but I think people take the assumption that every time the price pumps, they're just massively dumping shares. And that's not how ATMs work, right? ATMs are typically spread out over a long period of time because the whole intent for how they execute an ATM is that they spread those shares out over a period of time as to not take up a big percentage of the trading volume. So it's typically going to be maybe 1% of the trading volume in a week that they might use on the ATM. If there's massive volume trading on the stock, they might bump it up to 3. But when they're buying at a 2 times multiple to net asset value, every dollar they're collecting buys an asset that goes to the balance sheet, that lives on that balance sheet and has the opportunity to build value in perpetuity with their strategy, right? They have no intention of selling any of this. So they're holding an asset that can continue to appreciate in value. So you want them to acquire that asset as often as they can if you're a shareholder, and it's going to build that base intrinsic value under your share. And over the long run, it's going to just continue to accrue value to you as a shareholder. So I don't view the ATM as a monster. And I don't think that the stock price starts going up and Saylor starts calling people going, sell 5 million shares. That's not how it works, right? No. So there's a little bit of a learning curve still around that. I do think he did a pretty good job at showing the value that can be generated using the ATM. But because it is inorganic selling pressure, it's always going to have some level of an impact out there on a short term. And if you're a derivatives trader that has options expiring on a Friday, you're going to be a little upset if they use the ATM heavily that week. No way around it.
Absolutely. No, thank you for that, because it's been such a topic. There's a lot of, I think, new investors, retail investors that just think that every time the stock goes down, even on a day time frame, it's because it's Saylor hitting the ATM. And that's just not how it works. And one other thing, just on MicroStrategy, I think this is just an interesting point for people. There's a ton of people that complain about Saylor's entry prices, that he buys at what they would see as inopportune prices. But I think the thing they don't understand, contrary to you, Saylor's cost of capital is cheapest at the tops. At the tops, he is able to sell $3 of shares, $1 of shares for every $3 compared to $1 of shares for every $1.50. So actually, it's completely logical to him to buy the top. Any thoughts on that?
Look at the chart, right? They publish a chart of all of their buys. They don't just buy at the tops. They buy all the time, right? It just happens to be that during this cycle, when they really ramped up and they really scaled, Bitcoin's been on a trend up and to the right. So yeah, they're buying at the high periods. And that volatility, when you do get those major spikes in prices, that gives them access to those credit markets at really good terms, right? So when you look at that and you go, all right, say the MSTR price spikes and Bitcoin spiking along with it. If the difference between how they could have raised capital a week prior, if they could have got a 35% premium on a convertible bond, but now because that implied volatility has spiked really high, the share price pumped, now they're getting a 55% premium to the spot price of the shares, that's massively more accretive. So it's not necessarily you're only going to buy the tops, but you're right. In those transactions, they get the best economics during these periods of massive volatility, and that typically comes during a price bump. But he's agnostic to those because he has a view that Bitcoin's going to $13 million a coin. Yeah. So he doesn't care if he buys at 85 or 87. He's just going to continue to accumulate. And by the way, watch all the news. There's more people entering the market. So he's not alone in this market anymore. So there's a lot of demand that's coming. A lot of it's coming from corporates. And that means it's going to come from the institutions that they're serving with all the products. So he's got the advantage of scale. He's obviously the biggest player in the market. But because of that, he's got to go raise that capital when it's most opportune. But he has more weapons in his war chest now than he used to have. Now he's got the STRK offering that he's got an ATM against. He's got the STRF offering, which I'm sure they'll have an ATM against here in the not so distant future. So he's now got tools where he can raise during dips if he wants to, because those products are unique because they're essentially self-healing. If he hits the ATM on those and drives it down, the yields climb, you attract more investors, it pushes it back up to what the market prices those at. So now he has different tools than he had in the past. It used to only be ATM and convertible bonds, and now he's got more tools to play with. So he's got a lot of wiggle room to execute now.
Yeah, we should talk about Strike and Strife, and I'd like to hear you explain them. Since we were talking about the raise, you can see the MSTR, which is just the base equity, high on the volatility side, low on the seniority side, and then the converts, which we talked about and has been around for a couple of years now. These are the bonds that are issued, and the money is used to buy Bitcoin, and they convert into equity. And then there's these two are newer. The Strife and Strike are newer instruments, and would love to hear you explain how those work and why they're important.
Yeah, what he's basically doing is he's designing products for all these different pools of capital that want a different place in the capital structure. So they want a different risk profile on their investments and a different volatility profile. One thing that's not on here would be all the derivatives, and you would probably put those way off the chart on volatility, because if MSTR is levered Bitcoin exposure, these derivatives are MSTR to the fifth power, right? They're highly volatile, which is why people love them. But what they're creating here is they're creating stable instruments that meet certain needs, and then they're creating more volatile instruments where you can create a different upside profile and downside risk profile for yourself. And he spent a long time talking about that with the converts because of the way that they trade as essentially high risk instruments where they're trading below their par value in a lot of instances. And so it creates these interesting opportunities for investors to tailor a portfolio that has long upside exposure with nearly no downside exposure because they're so over collateralized on all these instruments and they're trading below par. So you've got the par value on those bonds, which is what they're going to be at maturity if you just held on to them. So you have upside on that alone. But then they introduce these different ones, these STRF and these STRK, which have fixed income components, but they tailor to different audiences. Some of these buyers, like endowments and pensions and insurance companies, they're not really looking for the convertible feature always. So that STRK offering tailors to the people who do want that opportunity and some exposure to the underlying equity. So because STRK is 1/10 of a common share of MSTR, right? You can look at the value that STRK is trading at, and you can essentially calculate what percentage of that holding is actually MSTR common stock if you looked at it. It's going to be whatever 1/10 of the current trading price price of MSTR is. So you have long exposure to MSTR with that one, but you've got a liquidation preference price on that, which gives you some security. You're higher up the capital stack, so you'd get paid out before the MSTR common stockholders are, and you have a yield. So that one is a very appealing instrument to a pretty broad group of people, myself included. I like that instrument. Yeah,
Sounds
exactly.
good to me.
That one's really
Yeah.
appealing. And then you've got people who don't care about the underlying equity at all, but what they want is to maximize their yields. They want stability and they want yield. And there's one thing that corporates can offer that Bitcoin natively can't, and those two qualities are duration and yield, right? If you think about it, for a lot of these institutions and the way they have to structure their portfolios, they need to be able to blend in duration and yield to what they're holding. And Strategy's really accomplishing that through STRF, STRK, and the convertible bonds. Right? With the convertible bonds, you're putting a specific duration. So if they need to time match durations against liabilities, if you're an insurance company, those become very attractive because you've got the upside potential of what Bitcoin does and what STR does relative to it. But you've got downside protection and yield that you can collect along the way. Same thing happens with STRF, except for that one is just a pure perpetual yield machine, right? You're not exposed to the MSTR equity. You're not worried about the volatility in the MSTR equity, but you've got a more than market yield than you're going to get on nearly any other product. A 10% fixed yield is pretty incredible in these markets today. And so that becomes highly attractive. And I think that's really where they see the most value being created, even for their common stockholders down the line, because you don't have a dilution event that comes with STRF, at least not a native one. You'll have some, because they're going to have to fund the dividends. And the piece that people don't ever like to talk about is how are they going to fund the dividends? They're going to fund it using the common stock ATM. But the math that you're looking at is that if they continue to drive value to the common stock, and he said very specifically that he's focused on increasing the value of MSTR. That is his guide. That's what he's trying to do. And when you have an increase in the value of MSTR, over time, it takes less and less shares to fund those obligations. So it becomes easier with less dilution over time as MSTR climbs in price. So when you're getting 100% of that capital today to go buy Bitcoin, and you get to spread those dividend payments out over decades and decades, that's a really powerful tool. So I think they want to scale those two up pretty quickly. People have been looking at the fixed income side of their capital raising plan and been getting a little disenchanted because they're seeing them move faster on the equity side than on the fixed income side. But the reality is there's a scaling period for STRK and STRF, right? They need to achieve a certain level of liquidity to keep dripping more shares out there where they can keep issuing those. So it's going to be a ramp period, but it's going to come. And I think that actually becomes their preferred instrument for raising the capital moving forward because of just how accretive it is to coin per share. They're really powerful.
It's amazing. So there's basically two more kind of pistons in this engine now. And do you see this system as fully formed now? Do you see any other gaps or potential like other instruments?
I don't think they're anywhere near done. And they alluded to it because they said that they were evaluating products for international markets, and they've still never done anything with warrants. There's a lot of other levers that I think they can pull. But I think what they're focusing on at the moment is, one, they've proved out really large markets, really big pools of capital, and they've shown everybody that these are legitimate instruments. And now they need to show everyone that these are institutional grade investment instruments. And they're pushing for the ratings now. They're becoming a little more of an activist in that space. They always have been in terms of pushing the messaging. But now when they're actually doing all the actions for the investors to reach out to Moody's and Fitch and all these rating agencies and start pushing them to really give these a look, they understand just how powerful it would be to be able to get these fixed income instruments rated. And if you can get them rated, the amount of capital that arrives at your door willing to buy these instruments is incredible. So I don't think they're losing sight of the opportunity they already have just with the playbook they've got published out there. But they alluded to the fact that they're not done, and they're constantly looking at new products they can bring, new securities they can bring that are going to serve as many pools of capital as they possibly can.
Ben, have they talked about explicitly a desire or a plan to get securities rated, or is that more just a speculation at this point by the investor community?
That was a huge part of his presentation yesterday, was he was making the case for why these are institutional grade and why they should be able to get rated directly by these ratings agencies. agency. So he had several slides in there that showed how they would compare against traditional rated credit out there in the market and why they should qualify for their AAA because of that over collateralization. They started talking about the Bitcoin ratio, which is essentially the Bitcoin divided by the debt obligations. You're showing just how over collateralized you are on all of these obligations, and it shows how low your probability of default would be. So he spent a significant amount of yesterday's call making the case to these rating agencies for how they should be evaluating these types of companies, because I think this one is so perplexing to rating agencies because they have their frameworks they've been operating in for decades now, and this gives them an entirely different view. So yeah, this is absolutely one of his main focuses, because that is going to be one of those events where you say rising tides lift all ships. Imagine the impact for every company that's a Bitcoin treasury company if you can issue these types of instruments and get them rated. That's massive.
Let's talk a second about the plan. So this was announced as well. The 2121 plan has been out there. It seems like it's, how far along are they on that? The initial plan, it was going to be for like 3 or 4 years. I don't know. I'll let you explain it, but now they basically doubled down.
So this is what ruffled some people. Was initially when they came out, one, I think they surprised themselves with how fast they were able to move on that plan. It was initially slated as a 3-year plan, and it was 21 billion equity, 21 billion of fixed income. And they're essentially through the equity. They've got $100 million left on the other ATM. So now they've opened another $21 billion ATM. So now they're going to have $42 billion in total for the equity portion of the plan, and then $42 billion that's planned for the issuance of fixed income. And you can see right there where they're planning to get a lot of that, which was to my point earlier, says 21 billion ATM strike. So they're planning to use that strike offering in the ATM that they have open on that strike offering to fill a significant amount of that fixed income piece. And right now, strike isn't a massive product, right? I think it's 700 million, 800 million, something like that. Yeah, I think they're showing 700 million in here, but so they've got a long way to go to scale this up. But now that people have found that it's this much more stable instrument where you've got upside exposure to the explosive growth of MicroStrategy and Bitcoin, I think it's like the perfect entry point product for people that want to wade into this ecosystem. If you're not ready for the high voltage of the pure equity and how much that's going to move, but you want to be directionally long, but you don't want to see your portfolio fluctuate like crazy, STRK is perfect, right? You've got a convertibility feature to it, so you get long exposure to the equity, but you've also got a fixed income component that's going to pay you $8 a share every year. And so you get a stability component with a growth component, and it lets you get into this ecosystem while you learn about everything else that's going on in the value proposition of each individual product that they offer. So I think it's going to be very popular because of that exposure to the MSTR equity on its own, I think it gives a higher value proposition, a higher return possibility than a lot of other equities out there with downside protection, right? You've got a high liquidation preference, you're higher up in the capital structure. It's one of those really safe investments to get into if you're an investor just wading into the space who's not ready to watch their portfolio fluctuate 50% at a time.
I will just say I'm amazed at how official, and it's always mind-blowing to me. And I think yesterday was a really big moment in time of just like how official, I was going to use the word financialized. That probably is not as welcome of a word for some of the people who have been in Bitcoin for a while. I'm in the camp that this kind of thing was inevitable. Yes, Saylor and MicroStrategy are blazing the path, but the kind of financialization they're using, the merging of traditional financial worlds, my old career in fixed income portfolio management getting merged with Bitcoin, kind of stuff I never really thought would happen. Ben pointing out that 150,000 people listened to this earnings call. MicroStrategy's market cap is now in the neighborhood of 100 billion again. In August of 2020, if my memory is correct, it was around 1 billion. So you're literally talking about 100x in 5 years, 4.5 years. Just really mind-blowing stuff that I think a traditional investor has to be paying attention to some extent now. I just wanted to step back and make that kind of high-level comment. But as Ben said, and Brady, I loved your question about, do you think there's any more pistons in the engine, any more arrows in their quiver that they're going to come out with? And Ben gave a very resounding, they have a lot more that they're going to do. And that's why this earnings call went 2 hours yesterday. They outlined some of that stuff. So I think we're just like scratching the surface at this, maybe I should say Bitcoin securitization rather than financialization, this era of Bitcoin securitization. And I'll just make one last comment. I understand how some people don't love that, kind of the more purists in Bitcoin, because to a certain extent, some of this is financial engineering. But as long as the world we live in is a world where you have this dollar system and it's going to be around for a good amount of time, which is my belief, I think it's all of our beliefs here, that the dollar system is not going anywhere anytime soon, there is this massive opportunity to tap the debt and equity capital markets and accumulate Bitcoin. That's just the nature of the system. So I get it. There's some people that just want to focus on holding Bitcoin, self-sovereignty and all that stuff. And all of that is great. But this opportunity is here and there's going to be people capitalizing on it. And MSTR is blazing the path.
This is how you transition from one monetary system to another. So you've got to have instruments that live in the traditional financial system that bridge over into the Bitcoin system. And that's what's happening.
Well, you can think of this as the evolution of Bitcoin is for everyone, right? Sometimes they just need it in a different form, and corporations can provide that form to them, but they're thriving off the unique characteristics that Bitcoin holds as an asset. So it really does expand that and make it truly for everyone, individuals, corporations, nations, right? It's the beauty of what happens when someone creates something as impactful as Bitcoin and then just releases it to the world. You give up your control and the world gets to decide what to do with it. And luckily, what the world's deciding to do with it is make sure that value gets driven into every part of society, no matter what tier you're playing in. If you're a nation, you're a company, you're an individual, it has a use for you. So Bitcoin truly is for everyone.